Okay, and here we go. Welcome back to Stacks at Bat, the numbers, and I wanted to do a quick update here on Arcos Dorados Holdings, symbol ARCO, listed here on the New York. Again, for those of you who are unaware, this is the kind of like the South American, Caribbean islands. This is a McDonald's restaurant play outside of the traditional 50 states and also the other international branches. Like we know McDonald's has a lot of locations in Europe and whatnot. That is not what Arcos Dorados is, right? So obviously they're paying a royalty to McDonald's Corporation, and you can see, look, they're in Brazil, the Caribbean, Aruba, right? So Chile, Argentina. So we're all over kind of Central America, South America, and for the most part, the revenue on this company has been steadily increasing, which of course we kind of see in the parent company, McDonald's, as well. So that's why when we first looked at it, we were saying this is essentially a play on McDonald's, but we're taking advantage of just a different demographic now. So quickly going over the numbers here, stocks at 8 1/3 on the close, down 19 cents, 2.25%. We can see we have a market cap 1.75 billion, PE of a little over 12. Look at the beta on that stock as well. Again, the beta is the volatility, excuse me, the volatility of a stock in relation to the overall volatility of the market. So you can see significantly less volatile than the actual market. The EPS, it looks like, again, the revenues have been growing, right? So we see basically since 2024, the stock has kind of stopped the rage that it's been on, and it's been in this kind of downward long-term consolidated channel. I drew out last time on previous videos, these were some levels I was watching, 873, 777. Stock recently hit a low of 807 after the earnings and then popped back up. But you can see here, again, this was the gap up and the immediate bottom there on that candle, 873, and that's why you can see that looked like a key level that the stock wanted to hold. And you can see even recently, a couple of months back in September, we broke that level. Look, it fought to hold it, came down to the trend line, went right back up to that level, got above it. Then we actually got the news. The last time we looked at the stock was on September 4th. So this was also the news, I think, of like renewing the franchise agreement with McDonald's or something. We'll look at the news, but it was obviously a good piece of information that came out, a nice little positive catalyst for ARCO. That popped them up to 10. Then we kind of started to consolidate down kind of into this wedge going into earnings, because again, as you see, the last couple of quarters before this last quarter, EPS slightly missing, with the revenue, though, slightly beating. So technically, we've had mixed reports, right? You can see miss on the EPS by 2 cents, but they beat on the revenue here. Miss on the EPS by 5.5 cents, but they beat on the revenue, right? So we see the revenue is moving along steadily well. We just need to get our costs in line a little bit, and then we'll start to beat the EPS estimates. And technically, obviously, we'll have beats on the top and bottom line, and that'll look even better, because that's pretty much what the company was delivering for the years leading up to this recent consolidation zone, right? So we were sitting at about where we are now, at about 8 1/4 at the beginning of 2020. And then, of course, everything got locked down, stock tanks to $3. And then look at this, though, on the up and up for almost 4 straight years, right? So that's why I understand we just want to go up and up, but this is what I mean when I speak about a stock having to come back down to reality, take a breather, right? Come back down to earth a little bit, set itself up, and then bounce and potentially take that next leg higher. So, in my opinion, definitely a great grower here in the numbers, in the chart. And again, what you had was a stock that went on a 4-run tear that's hanging out this year. That's what it's doing. It's hanging out this year. And if you look at it the way, I have my lines drawn out and stuff, let's say hypothetically, if I showed you this chart and I said, yeah, listen, it was raging for 4 years. It's going to kind of hang out for 1 year, and then it's going to bounce up. Who knows? Maybe for the next 2 straight years, right? So that's why, if depending on how you want to look at this, obviously, if I laid that out for you, then chances are you would say, all right, you know what? If it looks decent in the numbers and they're, keeping it down, they're keeping it quiet, I'll start building a position here. I'll start accumulating shares. And then who knows? Maybe I'll turn around in a year and it'll be back up at 12. It'll be at new highs of $14, right? With your cost down here at 9, 8, 7. That's why something like this could be huge, whether we're talking 6, 12 months down the road or 6 years down the road. Because in my opinion, the numbers are pretty steady. So let's look at the numbers quickly, and you can see, look at this, a little under 3 billion here. 2020, we get locked down. They still bring in 2 billion. Then they bounce right back, 2.6, 3.6, 4.3. So also, even though we're kind of beating it up recently over the mixed earnings reports on the EPS side, we can see that as the revenue's been steadily climbing, our profit margin's been climbing as well. The company for 23, net margin percentage almost 4.2%. And we can see over the last couple of quarters as well, the profits dropped from 5% down to 2.4, 2.6. But you can see that the revenue has been steadily climbing. And you can see also the U-turn recovery now into the profit margin. So in my opinion, Q4 here next quarter, 1.18 billion, which technically would be up quarter over quarter again and again and again. And we can see that that would essentially basically be in line with where they were last year. And honestly, I know that all demographics and even all locations here domestically with these fast food restaurants, sometimes, you know, you'll see a commercial on TV for a deal they're running, and then you actually go down there and they're like, oh no, we don't do that at this location. So I'm not sure, because I know what was it? They rolled out, right? Like a $5 meal or a $6 meal here domestically in the States for regular McDonald's. And I just don't know if they rolled that out as well internationally here in Central and South America. But either way, again, people know the name McDonald's. You know, you're going to have your loyal customers. You're going to have the people who run in there when they want a burger. And it seems like we're on the up and up here with something like ARCO. So that's why, again, you know, that variable business model, as, you know, revenue increases, then obviously, again, profit margin should follow suit. And we should just kind of continue to be on the up and up. But again, they brought in over $4 billion last year and made a profit off of it. And the market cap right now is $1.75 billion. So that's why, in my opinion, I said I always kind of was intrigued by this one. And again, we have a dividend here. We're getting paid a nice little dividend, currently yielding a touch below 3%. And if we look, we can see the debt has pretty much been flat here. 162, 169, 169, 168, 171. So the debt isn't really moving, even though on the flip side, remember, our revenue and our profits are kind of steadily increasing. So we're able to grow the business and generate more revenue from existing locations without taking on more debt over the last couple of quarters. So in my opinion, I think that's a good sign from a business perspective. Cash, 100, 115. Okay, yeah, that's kind of bouncing around. We have short-term liabilities outweighing short-term assets. And then, of course, we have the inverse on the long term. But if we look and switch over here and look at the balance sheet, we can see that the equity, again, total assets minus total liabilities yields total equity. And we can see that the equity over the last 18 months roughly went from 3.25 million up to over 500 million. So we're up roughly what, like 60% in value, in equity value, just over the last 18 months. And if we look, hold on, let me recrunch my numbers real quick. Wait, yeah, okay, 100 million cash, so now that's like negative 1.6. Total equity, $500 million, so we're still at negative 1.1 roughly. And now we come back down here and look at the revenue again for last year, right? Negative 1.1 plus 4.33 billion is what? Positive 3.2 billion. Plus they made 180 million. So now you're at 3.38 billion. In my opinion, that is the fair value of this business. Stock currently valued at about half of that. So that's why I think when I looked at this in the past and we were looking again in that downward channel, I said, in my opinion, you know, it raged for 4 years, let it cool down a little bit. I know you're getting impatient, but as I always say, when we like a stock, in theory or in the numbers or even the long-term technicals, right? If it doesn't immediately break out and do what we want to do, I always say, in my opinion, unless the business itself has changed or unless we get a massive negative headline catalyst coming out on the stock, then you should really be viewing that as an opportunity. that is an opportunity for you to, again, continue to work or run your business and, grab that extra income every week, every month, and slowly trickle it in and piece it into the situation. Build a position, accumulate shares or calls or puts, whatever you're doing. And again, just accumulate and view it as an opportunity and then catch that long-term growth. When you can see now we're trading about 3 times book value, which isn't too overvalued here in my opinion. I mean, we've seen 5, 10 times book value, right? And also the book value per share over the last 18 months, again, climbing with the assets and with the equity. We can see the book value went from about 1.5 up to almost 2.5 now. So this is what I mean. In my eyes, the fundamentals are growing very nicely for something like ARCO. And that's why if it wants to chill in this channel, again, even if we come, all the way down here, what are we talking about? Even, first quarter, second quarter of 25, I don't think it's going to take that long. But hypothetically, in my opinion, again, I would view it as an opportunity. But that's just me. But also we can see, well, I see, we're in this kind of sideways channel now since November started, basically. Again, and then these earnings came out. We can see that they came in with EPS of 17 cents, estimate 16.1 cents, beat that by about 1 cent, a little over 5.5%. Revenue came basically in line, 1.13 billion on that exact estimate, beating by about 5.5 million, roughly 0.5%. So nice inline quarter for ARCO. In my opinion, the stock should have popped, and you can see we've been just kind of stepping down, and we even dropped to new lows here of 807. And then we spiked back up to almost 9, and then we kind of just been hanging out, right? So this is why I'm seeing personally this kind of sideways channel here, and I drew this out because this could potentially be our neckline, and this is maybe our first shoulder, and maybe our head, and now we're maybe potentially forming our second shoulder. So this is what's known as an inverse head and shoulders. Again, head and shoulders up here, coming down to the neckline, breaks, bearish. Inverse head and shoulders comes up to the neckline, potentially breaks, bullish. So that's why if this comes to fruition, then yeah, of course, we could come down a little bit more. Maybe I want to say maybe like 8.25 maybe. But then you should see the rebound, again, back to that 873 key level. Look how it held there. Because I feel like it should have went up in the fundamentals. But again, in the technicals, if Wall Street wants it to form a head and shoulders pattern and force out the short-term traders, then obviously you long-term investors should be here for it. And again, if this comes to fruition, we should hopefully see this start to curl back up over the next couple of days. And then if we break up to the next trend line, you can see we're looking at about 9.25. So in my opinion, that's where it really should go. In the short term. But again, if we want to maintain this downward channel, you can see that if the head and shoulders does not form, we may come up still, but have the rejection off of 873 and come back down to just kind of stay in this channel. So in my opinion, unfortunately in the technicals could go either way, but this is why, again, when we're talking about a long-term investment, I say, in my opinion, the technicals really shouldn't be weighted too much. Of course, they're relevant. You want to keep an eye on it, see what the stock, how if it's forming any long-term patterns. Is it in a 3-year ascending wedge? So now it's ready to break and you can get it for 20% off. I understand that you have to take technicals into account. But when we're talking about investing, I still say, in my opinion, fundamentals are key. And that's really all it comes down to. That's really all it comes down to. Again, kind of that perfect combined milkshake, if you will, of all these ingredients: the technicals, the fundamentals, the forecasts, how the analysts feel about it, what's the timeline, right? Are they opening more restaurants, right? We need to take all of that into account, of course. But again, in my opinion, when we're talking about the long term, it's really more about the numbers. And what you'll note is the stocks that consistently climb over the years, if you go back to those years and you look at how things like the gross margin percentage, the operating margin percentage were climbing, profit margins were either holding steady, or if they went down, they immediately got back up within like 2 or 3 quarters because they restructured immediately and cut costs. They were consistently beating earnings more times than not. They were consistently beefing up guidance and forecasts moving forward, whether it was for next quarter or for next year, right? Consistent positives on the fundamental side yields consistent growth over time. And that's why when you look back and you look at stocks like Apple, Walmart, Coca-Cola, you say, wow, look at this growth. I wish I bought it all these years ago. The reason why it did what it did is because of strong, growing, solid fundamentals. End of story. But going off on a tangent, let's look at some news. Arcos Dorados, revenue surpasses estimates. Top line increase year over year. Bottom line fell from the prior year's quarter. See, so that's what I mean. Like I always said, if Wall Street could find a reason to keep it down, perhaps they will. And also, more importantly, I want you to remember as well, this is, again, a Central/South American play, but also at the same time, it's tied to the McDonald's name. So while in the numbers and previous charts have shown us that this has been growing well, and in my opinion probably will grow well over the years, we have to remember also that we had Trump just win our elections here domestically in the States. So now if we're kind of, reinvesting into America and America first, we're making us great, you have to remember that even a stock like this that has strong fundamentals, that's tied to a brand name franchise, it may not have much money flow going into it simply because it's not technically American based. However, because this is growing and the parent company, actual McDonald's, MCD, has been kind of holding their own, I'm sure a lot of money may flow into MCD as well. And also, if Arcos keeps growing and opening more locations, remember, they're paying that royalty fee to MCD. So that's why, again, it might take a little more time with something like ARCO, but in my opinion, I think it has a lot of upside. I think it's undervalued in the numbers. So, like me personally, I'd probably roll the dice more with the smaller up-and-comer like ARCO as opposed to just buying MCD. But that's just me. And also on the flip side, if you're only working with like a couple of $1,000 maybe, and you're a smaller, newer investor, this obviously is much cheaper, right? It's $8. Excuse me, it's $8 a share. McDonald's is $300 a share, right? But let's get back into this. During the third quarter, EPS 17 cents. Yep. Bottom line fell 39.3% year over year from 28 cents reported in the year ago. Yes, we know, but we've been seeing, again, we looked at the potential U-turn recovery in the net margin percentages of the revenue reported over the last couple of quarters, right? So now if we kind of like corrected our costs and got those in line, and now we were dipping and now we're on the up and up, right? That's why I don't personally view that as a negative. And also, even though that technically is a year over year negative, as we saw, they were missing for a couple of quarters in a row on the EPS side, and now they just beat estimates. So that's why, in my opinion, yes, a statistic like that is technically negative, but in my opinion, the EPS beat, I think, outweighs it. During the quarter, they beat. Top line increased 0.8% year over year. Sales during the quarter rose 16% year over year, represented 58% of system-wide sales. Growth was driven by strong performances in the mobile app and delivery services, along with continued expansion of the loyalty program. Yep. That is even benefiting McDonald's here in the States as well. During the third quarter, comp sales increased 32.1% year over year, courtesy of strong guest volume growth. During the third quarter, operating income $79.8 million compared with $91.1 million reported in the prior year. So this is why I'm saying, because some of these metrics are going up, but some of these metrics have gone down year over year, this is why they may continue to keep it in this downward consolidated channel. And again, you may technically see new 52-week lows because it just hit 807, and I have my other key trend line drawn out at 777, I believe. So that's why, again, technically, we can continue to trend down. But in the immediate short term, again, maybe Wall Street digested these numbers, but they're seeing what I'm seeing, that even though we have some short-term negatives, we still have that long-term growth. So now we have to see if something like the inverted head and shoulders pattern that we potentially see comes to fruition. So we'll see what happens over the next couple of days. During the quarter, food and paper costs came in at $381.2 million, compared with $376 reported in the prior year. Yeah, well, inflation for the win. General had expenses came in at $68 million, compared with $67.8 million. Okay, that's pretty much unchanged. Adjusted EBITDA came in $125 compared with $129. Yeah, well, look, right? What'd they say? Food paper costs came in $4 or $5 million more. What happened to the EBITDA? Down by $4 or $5 million, right? So, you know, that's what I mean. That's what happens. But again, even dealing with that rise in inflation, the rise in cost, that slightly ate into the profits, it's proportionate, right? They're in proportion with each other. And that's why, again, going back to not to beat up those shareholders, I'm just using it as an example. But again, when we looked in the past with stocks like Luminar Technologies, Laser, LAZR, we were seeing that again, and it's not just them. We were seeing that with a bunch of other companies as well, right? They were like operating at these big losses, but then even if they went from like 25 million to 42 million, like they lost more money than they did when they made 20, right? You understand? So it was like, it's out of whack. It's out of sync. There's something going wrong internally in the business. But we can see here again, costs went up by whatever, 4 million and change. And we can see EBITDA dropped by 4.1 million year over year. So in my opinion, again, not necessarily a red flag, even though technically it's down. Total cash, 115 million compared with 196 mil. Net debt was 598 million, up from 481 million at 2023 end. Okay. During the third quarter, the company opened 19 Experience of the Future restaurants, all freestanding units. What the hell's an Experience of the Future? The Brazil division opened 11 Experience of the Future restaurants. So this is what I mean again. You know, we can try to kind of hinder the stock in the short term. Oh, this margin decreased year over year. Oh, you know, yeah, you beat on EPS, but technically your EBITDA is down. You know, your cash is down a little bit. But again, this company continues to steadily either maintain or increase current revenue while continuing to expand and just open more and more locations. So that's why I'm saying now, if this is going to be like another kind of B tier, second tier McDonald's franchise beast of a stock, but we're talking about Central South America, a couple of U.S. territories, right? I think the Virgin Islands are in there maybe. But you understand what I'm saying. We could potentially have that kind of similar play now just in a different demographic. So that's why, in my opinion, I like it. And until I see, you know, big misses on revenue or costs randomly climbing, no one understands why, right? And now we're missing on EPS. Until we hear a situation like that, or the fact also that expansion has now been halted and they feel they either can't afford to open more locations or don't need to or might not have the staff to, right? Whatever that's when something like that happens, then we could potentially talk about hopping the fence and saying it's not as good as it looks. But in my opinion, I like what I'm personally reading here when it comes to ARCO. McDonald's franchise ARCO beats, yeah, okay. Yeah, higher average check amounts, increased guest volume, digital channel sales rose 16% to the year prior. So yeah, half the sales are coming from the app, the delivery, and as you see, the kiosks. So, you know, people, we appreciate convenience, and we always pay for convenience. That's why Grubhub, Postmates, right? These apps, Uber Eats, right? These apps, they're always going to have customers who are ordering for the convenience, paying the fee, saying, yeah, you know, I want a Big Mac, bring me a Big Mac. So it seems to be working out very well even in the South American demographic. Company's loyalty program, now active in 3 markets, saw significant growth, reaching 12.9 million registered members. Consolidated adjusted EBITDA for the quarter, 125. Ratio remains steady at 1.2. Company opened 19 restaurants, 11 of them in Brazil. Company expects to meet its full year guidance of 80 to 90 restaurant openings in 2024. That's what I mean. We're still growing. We're still expanding. So until we hear that they're stopping the expansion because they're in a good spot, or instead of expanding, we're starting to close like 5-10 locations that aren't performing well, right? Once we potentially start to hear a little bit of a different story, then we can look at the company differently. Right now, in my opinion, I think this is easily a $15 stock. And again, that would double the price and the market cap, but that would still, in my eyes, bring it to fair value. And again, if we go 1.5, 2 times fair value, that's why you may turn around. You may eventually see this stock at $20, $25, even $30 a share over the long term, in my opinion. Company exited the quarter with cash. Okay. But yeah, that was a good update also about the restaurants opening. And I'm sure some people in the comments might say, yeah, inflation, food costs are up. It ate into their bottom line. I don't know if I'd buy this one right now. Maybe I'd come back, middle of next year. And again, very understandable. As we say, it was up for about 4 years, and it's kind of been consolidating now for roughly the last 12 months. So again, if we stay in this channel, as I said, in my opinion, could view it as an opportunity to just, continue to build a position. And again, you kind of know what you're owning, right? You know what you're buying, and they pay you a slight dividend to own it as well. So, as we know, there are worse companies out there that you can invest into. Revenue, yep. Constant updates. Let's just see if this goes over anything. EBITDA, net income. Rising in US dollars despite weaker local currencies. Also, remember, they're in Argentina, and I believe, don't they have that new president, or what do they call it? It's not a minister in Argentina, right? It's president, I believe. But no, but anyway, I know he came in and he just kind of flipped the script with the whole economy down there. So they were dealing with hyperinflation. He got inflation rates in check. The debt of the country was just significantly climbing year over year. He's starting to get that in check. I think it was like they were saying like the first time inflation slowed in years or something in Argentina. So that's interesting as well, because again, while other locations in this umbrella of ARCO may be struggling, you do have a potential up-and-comer in Argentina, where the economy might get better, people over there might start to generate more discretionary income, maybe they go out to eat, once or twice a week, grab some McDonald's, right? The currency, their dollar, their currency stretches a little farther, right? You understand? So that's why something like ARCO could benefit from a situation like that, but we'll see. Comp sales up. Experience of the future. So what does that mean? You just like walk in and there's just like kiosks everywhere and then they shoot your food out at you? I don't know, whatever. But we know that McDonald's was talking about, I know, potentially trying to go robotic and whatnot. So we'll see how that plays out and what happens there. For year to date through September, we opened 56 restaurants, including 32 in Brazil. Since the fourth quarter began, we either opened or broke ground on all the restaurants we plan to open this year. So what this means is we're on track. We're on schedule, right? We were planning to open whatever they said, 80, 90 restaurants for the year, and they have either opened or began construction, breaking ground, on all the restaurants that they wanted to open this year. So in my opinion, that is a nice positive. Yeah. Yep. Interest expense. I'm reading. Okay, yeah, you can see the EBITDA down slightly. Okay. But again, we know it's the rise of the digital age and convenience, as we said. So the fact that those digital sales are up and those digital channels, as they call it, are climbing very nicely, then again, that technically is good news. So we'll see in the technicals if this head and shoulders comes to fruition, if we want to break up back to the trend line. We'll keep an eye on it. But just remember, before these earnings came out, the stock was technically higher than it is now, right? It was like 60, 70 cents higher. Then we got the news. Yeah, I'm sorry. That's what I wanted to look for. That was back in October. Here we go. Arcos Dorados to renew McDonald's franchise. Arcos said Tuesday it notified McDonald's, again, this is back October 1st, so this is like 7 weeks ago, that it plans to exercise its renewal option for their master franchise agreement. The existing MFA is eligible for renewal with a new 20-year agreement that would take effect on January 1st. A new agreement would include an option for another 20-year renewal starting 2045, the company added. The new agreement, which is being finalized, is expected to include a royalty from gross sales of 6% for the first 10 years, 6.25% for the following 5 years, 6.5% for the last 5 years. And again, they had the pop initially off of this news. Sorry, I might need to get a new chair. This thing's squeaking, creaking. It's like I'm sitting on a haunted house. But you can see here, my keyboard disconnected, reconnected. The whole setup's falling apart. I'm telling you right now. But we can see, again, the stock was in the 8s. We got this news. Boom. We renewed the franchise agreement. Stock popped right to the top of the channel. You can see, top left of the screen, OHLC, the open, the high, the low, the close. You can see the high, 1027. Literally right to the top of the channel. And then stopped again and started to drop down right back to where it was, and then even broke, continued into that wedge, it looks like, going into earnings, and then we technically had a beat. Right? So that's why, in my opinion, technically, we jumped up to over 10 on the franchise agreement news, and then we beat earnings. So that's why, even conservatively, in my opinion, this is at least a $10, $11 stock. Because that's where Wall Street took it. So, in my opinion, that's where I stand right now on ARCO. And again, if I was able to buy it, actually I am able to buy it right now with a couple of bucks. I do not currently have a position in ARCO. But hypothetically, if I was to buy some shares here and then, again, stayed in this channel and comes down into the 7s, in my opinion, I would continue to add to the position until, as I said, I saw a drastic change in news, numbers, or, again, number of locations opened or whatever. But this is why we have to look at the technicals as well. RSI seemingly continuing that downtrend. It's slightly sub 39 here on the daily, and we can see the bottom Bollinger Band 820. Also looks like potentially the MACD just crossed to the downside as well. So again, this is why, while I like the head and shoulders pattern, we may not actually form this pattern and may just continue to drop down and sell off back to the very low 8s, potentially 7s, making that new 52-week low. Again, that was right here, 807. But yeah, the MACD technically crossed to the downside. So we'll see if it wants to fight to stay flat and like stay above it and not let it cross and pop up tomorrow, continue that head and shoulders, or if it just drops and breaks. RSI on the weekly, kind of the same story, right? Because again, the stock was on the up and up for years, and now you can see we just kind of slowly been stepping down here. We get to around 30, we get a little bit of life, then we sell off. Around 30, a little bit of life, middle of the road, then we sell off, right? So right here again, also, you can see the bottom Bollinger Band on the weekly, 803, and we have the 200-day moving average curling up with the stock here at 781. So again, that's why I'm saying low 8s, potentially high 7s, new lows might happen before the stock pops up. But again, potential head and shoulders, we have a couple of things to keep an eye on. I just wanted to do an update because I didn't when they reported earnings. So, my apologies for that. We got a lot going on, though. Everyone's always asking me, oh, can you do an update on this? Oh, I found this stock. Can you look at that? I mean, again, we know that there are so many companies out there. It's impossible to analyze them all, do updates on all of them every single day, right? So we try to do what we do. But again, that's why I say, if you guys want, join the Discord. If you want, free for you guys to join, and you can just have that back and forth conversation without having to, wait for me to sit down, take 20, 30 minutes and look at the stock, do an update. But again, you can see bottom Bollinger Band 200-day, so we might have that dip down. Also, look at that MACD as well. Look, came down, basically touching right there, potentially about to cross to the downside. So that's why we may not see the head and shoulders, and we may just see like a quick break to the moving average, and then maybe bottom out and start to curl back up. So we'll see. But, yeah, technically could go either way. But again, in the numbers, in my opinion, one of the main things to look at, in my opinion, it looks pretty decent. It looks pretty decent. Had a pivot point here on the weekly of 857. Obviously, we just got below that. So we'll see again. If we do flash break to the 200-day, it might immediately try to reclaim that pivot point of 857. So we'll keep an eye on that. And we switch to the daily. And we can see we have a pivot point right here at 827, which it looks like it's been bouncing off steadily. So that's why I'm saying we may continue down a little bit to about 827 and then bounce and form that second shoulder, right? So we'll see what happens. But also, again, my mark here, 777, and you can see here we have next support level 773. So you have a lot of action taking place now between like 830 and like 770. So, you know, it may get a little unpredictable here over the next week or two. But in my opinion, I think we laid out a decent amount of levels and technicals for you to keep an eye on. And I think it's a good place to stop. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.